recorded. So before we go into it, we're going to just pray to cleanse our spirit so we can receive this training from the beginning to the end. Lord, in Jesus' name, we give you the praise for life, faith, and strength. Thank you, Lord, for this training. Thank you, Lord, for people that's on this training, what we're about to receive and how we're going to receive it. Give you the praise right now. In Jesus' name, we pray. Amen. All right, so we're going to go ahead and jump into this training. As you know, training for the day is Bears versus Bulls. Alrighty, so training for the day is Bears versus Bulls. So the Bears versus Bulls method, basically the Bulls is the one that pushed the market up. The Bears is the one that pushed the market down. As you know, you're going to always have a Bears versus Bull setup. When you're looking at Bears versus Bull setup, and if you look at all the training that we've done before, it's getting you to a standard where you can actually look at your demo account and see how different Bears versus Bull is set up and how the market is set up. When you're looking at bulls in the market, bulls, I have my bulls set up for my candlesticks as such. Mine are green or a light blue, which lets me know the market is going into a buy trend. My bears is always set up in red. I always set my bears up in red. That lets me know the market is going in a downward trend. With that being said, when you first open your account on MetaTrader 4, on your computer or on your phone on the application, it's going to be standard. You're going to see black and white. Sometimes you might know what black and white is. I know they always have standard. Black is the bulls, and then white is the bears. So with that being said, if you like it like that, you can leave it like that. But if you want to add some kind of colorization to your market, you can actually change it to the green or the red or whatever colors that deems to fit you. So bears versus bulls. So we're going to go over what's the bear. So what's the bear in the market? Then I'm going to show you a bear's trend. I'm going to show you a daily bears trend. I'm going to explain to you why a daily bears trend is very important when you're scalping and also when you're looking at the 4 and the 1 hour. What is a bull? We're going to also go over bullish trend. Then we're going to go over the daily bullish trend, what it looks like, and then we're going to go over the question and answer session if you may have any at that time. What is a bear? So basically, what is a bear market? Typically, bear markets are associated with decline in an overall market or index like the S&P 500. If you're ever looking at the news, anytime you're looking at, when I'm trading, I'm looking at CBS News, or you can look at investing.com. When you are looking at those two, if you're looking at the S&P 500, you will see the little triangle and it's green or it's red. And if you see, it's almost like somebody pushing that button for it to go up or pushing that button for it to go down. When you see it highlight red, that means it went down however many percentage. When you see a highlight green, it means it went up for a very minor percentage. With that being said, anytime a market falls or declines within 20%, it's considered a daily trend, which is a downward trend. Now, if it goes in 20% up, it's considered an upward trend, and that's what makes the daily trends throughout the day. So, when you're looking at a market on that Monday, so that coming from that Sunday weekend to that Monday, it is not very good to look at that trend because that trend is a rollover from what happened on Friday. What you want to do, you want to give that trend enough time to happen throughout that Monday. And then from that Tuesday on to that Friday, you want to look and see what that trend is. For US 30, if you're trading US 30, which is a very volatile pair, you got a lot of money in your account, you can say, okay, what is the overall trend? My overall trend is a downward trend. So I know no matter what, if I see buys or sales, I know my overall trend is going to be a sell. Let me bring that to layman's terms. If you are in, or if you are from North Carolina and you are in California, and people say, okay, where is your home of record? My home of record is North Carolina, but I still live in California at the parent time. Let's roll that into the bear bull over the daily market. That basically says, even though I have a lot of buys in the market at a certain period of time, I'm still an overall sell, if that makes sense to you. So when you're looking at your average, even within that average, if it's not a buy, and you see a lot of buys in that average, but you go look at the daily say, I am a sell, you're going to know that whole market is an overall sell. So what you want to do if you're scalping, make sure you scalp on a very short time frame. But if you're looking at the 1 hour to the 4 hour, which is a longevity chart, you want to make sure you go into mostly a downward trend, because that's where you're going to get your money from when the selling in the market. Once again, anytime you decline over 20%, it's considered a downward trend. Once you up an incline over 20%, that's considered an upward trend, which you'll see here shortly in the market. Bearish trend. So bearish trend is financial markets can be defined as a downward trend in the prices of the industry stock or the overall fall in broad market indices. Basically, the broad market indices will be, like we said, the S&P, the NAS, the US 30. So all these, the Hong Kong, the JPN 225. So all those that you see in your index layout when you go to MetaTrader 4 or online to look at those symbols. Anytime you look at those indices, that's where you can look and see where your trends are derived from. So make sure when you're looking at your indices and you look at it, when you look at the 1, the 5, all the way up to the 4 hour, you're gonna make sure you look at that one day chart to say, okay, even though I see a lot of buys or sales on the 1, the 5, and the 30, I still know this is an overall uptrend or it's an overall downtrend. Bears versus bulls. Bulls is very aggressive. A bull is going to come at you. It's going to do whatever it needs to do to ensure that you're, if you're homing that territory, if you're in that area, that it's going to make you, move from the area, or it's going to try to hurt you. A bear is very sluggish. It hibernates. It'll try to get you, but if you're faster than the bear, it's not going to try to do its best to run you down. It just want to get you out of his AO with his area operation. So bears versus bulls. Bulls are going to come at you. A bear is going to wait till you come into his area operation. So what I like to do though is being in the market. I like the bears more than like the bulls, because you're going to get more sales than you get more buys, in my opinion. I wait for that buy to go to a peak where it starts to pull back, and I jump in as a sale. Bears versus bulls. So here's a daily bearish trend. When you're looking at a daily bearish trend, like as you see, like I explained before, so you may have a lot of buys, but guess what? It's still going a downward trend. So there's your downward trend. But still, there's nothing that broke this resistance right here. So as we look at that downward trend, which they have their dark blue as the bears, and they have their light green as the bulls. So as you see, we're pulling down, but that's a downward trend. Now we're going back up. Now this could be on the daily chart right here. So even though it's on a daily chart, you still have buys in the market. It still didn't break this resistance right here. And then it goes back down to wherever the support is. Back down, up, almost broke the resistance, down, up, that's 2 touches, back down again. So now you have another downward trend. So this is still a bearish trend because it's down. And even though we have this big candlestick right here that pushes us up to that resistance, it didn't break. We had basically a little bit of consolidation and then a little breakout here, a breakout here with a big wick. My mama, I told you yesterday what a big wick means. It means rejection in the market from the buyers. So guess what happened? We got rejection in the market from the buyers. Lets us know it's going the opposite direction. And then even though it pulled back and it's going up, you have in your lower lows and then your higher highs. Then it actually drops. Another bearish trend. Up, down, roller coaster method. Up, hits my resistance again, back down for the long haul. So this is on a daily trend. So you can actually look at this on a daily trend. If you get in right here, ride it up, down, down, you're already in profit. So if I zoom my way back to the left, I'm already in profit because this is below where I jumped in at. So now what I'm doing is it's going up. I can secure my profit if I want. Down, up, down, up, down, up, down, up. Now I'm already back in profit again. Mind you, this is on the daily chart. If I stay in, I'm back in profit again. You see how it's doing lower lows. If you go back to the left, I'm back in profit again, lower lows. I'm back in profit again for good, lower lows. And as you see, it just keeps on dropping off to the other side of the screen. Lower lows, lower lows. So point 1, 2, 3, and 4 gets you your lower lows where you're actually in that bearish trend where you can just ride that trade out. And that's what we can do from there. We can just trail stop that trade. So we can trail stop from here. Trail stop when we get right here. Trail stop when we get right here. So what I mean trail stop is the next low, which would be right here. We can trail stop to there. As we see it, didn't even make it back up there. Back down, trail stop to here. It will go because these are almost simultaneously almost the same. We'll trail stop. to right here. Trail stop again, trail stop, and then from here, we'll just trail stop here and just let it roll from there. Usually what a trail stop is going to pull you back. So if we trail stopped it right here, it'll potentially pull us back when it went back up into that buy. But once again, you just took all this home with you, and this is on a daily chart. So that's what I mean when I say trail stop on a daily chart, and then also a bearish trend going down. Even if we see the buys, the sales are taking over. So what is a bull? Bullish means that an investor believes that, an investor believes that a stock or the overall market will go higher. So basically what we're looking at is we're looking at a trend and saying, okay, all right, this is going in an upward pattern. So I'm going to look at what I'm doing when I'm looking at the upward pattern. I'm going to say to myself, okay, I'm going to look at the daily pattern to see what's going on. Or I even go as far as looking out to the week, see what's going on in the week, see how this thing has been trending over time. So I'll probably scroll back maybe 2 or 3 weeks to see what it looked like. Okay, so this right now has been doing a potentially upward pattern. Last week it was kind of down, but it looked like it's bouncing back, coming back up. But what will I do from there? I'll go back into my day, see how my day looks. Is my day mimicking my week? Then I go from my day, go to my 4 hour. Is my 4 hour mimicking anything on my day? Is my 1 hour mimicking anything on my 4? And that'll let me know when I get into it at the market. When I'm doing crypto, when I'm doing currencies, which is the dollars or the yens or whatever currency it is, I want to do that on a 1 hour chart. I don't want to jump in. I don't want to try to scalp currencies because it's a long time for those guys to mature. So I want to do it off a 1 hour chart. If I'm looking off the 1 hour chart, it's going to let me know what's going on for that hour. For this whole hour, this did nothing but buy. So I'll take that profit. And then if I see, okay, within the next 15, 20 minutes, it's still buying, I'll trail stop it from where I was in my at the last point of that last candle. I'll trail stop it there. That way, if it does pull back, I still get that whole candle for that 1 hour that I had, besides losing that money that I made on that last hour. So remember, if you're looking at the bulls and the bears, you want to scalp a week out to see what's going on. Bring it down to a day, then bring it down to 4, 1, and then if you're doing the regular currencies, 1 hour is the lowest you want to go because you don't want to scalp off in 1 minute on the regular currency. Very volatile, 1 to 5 minutes. If it's something like cryptocurrencies, over the weekend, cryptocurrency takes a while to go. So you want to make sure you're looking at the time frame. What does this look like over the weekends? What does it look like over the day? How did this do last week? How did this do last month or whatever? And then you take that into consideration when you jump into your trades. What is a bull? So this is the bullish trend. Bullish trend is basically an upward trend. Up, you may have some downs. And once again, you're going to have some downs. But no matter what, even though you have some downs in the market, it's still in an upward pattern. So this is what we mean when it's downs. So you have this candlestick right here that is shadowing this candlestick here. So no matter what, you have these candlesticks shadowing each other. This candlestick shadowing each other. But what happened if this candlestick right here pulls back to here on the next hour? So let's say this hour chart. If it pulls back here to the next hour, but then the hour after that, it pulls back and goes up. The reason why a candlestick will pull back, I know Terrence and Salem know this, but the reason why a candlestick will pull back, it can pull back for two simple reasons. That people got out the market and took their profit, or it's overbought, oversold. With that being said, it's going to pull back, and then once it pull back, it's still going to go in that same direct area that it wanted to go. Or that candlestick could be going into a probability of a fake out. Let people think, okay, it's going to go into a sell pattern. Enough people jump out of it, and then boom, it goes right back in the upward pattern. So those are some of the reasons why candlesticks could pull back in the opposite direction. Bullish trend. All right, so here's a daily bullish trend. Now, I know me, I really don't trust the bullish trend because, sometimes it'll pull back on you within a blink of an eye. So with that being said, if you jump in, mind you, if you jump in right here, depending on how much you jump in with, you got to see how it's going to go for you to jump into profit. So we're here. If we jump into here, depending on what it is, it'll let you know when you get into profit and how many lot sizes or whatever you have. If you want to make this a risk-free trade, you want to use your take profit as your stop loss. With that being said, if my take profit is 65.10 and I see that I'm going in the upward pattern and I'm at 65.09 or 65.05, I'm going to take my take profit off And then once it surpasses here, which is 65.10, I'm just saying just in case, once it surpasses here and goes up here, because this actually gapped up. So once this surpasses here, I'm going to change my take profit to my stop loss. So now my stop loss is here where my take profit is supposed to be in. Now if it pulls me out, it pulls me out in profit. But if not, like it did here, it kept on going up, kept on going up, kept on going up, I'm securing all this right here. So if I look at it again and it's at 65.20, I go to 65.15. And if it goes up to 65.30, I go to 65.20. With 65.45, I go to 65.30. And I keep on trailing it until it eventually, boom, pulls me out and closes me out of the trade. All right, so that's something that you want to look at. So bull market is a period of rising stock prices. So basically what we see here is a period of rising stock prices. It's going to rise occasionally until it actually pull back and stop you out, or until it hits that wall and then drops back down again into a sell pattern. Do we have any question, comments, concerns when it comes to the bear versus bull method when we're dealing with different trends in the market? Any question, comments, or concerns from anyone? No questions? If anyone's talking, I can't hear you because everybody's on mute.
Hey, Sid. This Salem. Hey, real quick, for everybody on here with the bear and the bulls, when you see the whatever color you're gonna use, when you see it's a bearish market or a bullish market, my advice, just the way that you can look at them as kind of the same. A lot of people have that connotation that you can only make money when it's going up. Just like we've been preaching to you guys for the past few months or whatnot, you can make money going up and going down. So basically what I'm saying, find your niche. When you see it's going up and that's what you want to go into, go up with it. When you see it going down, don't be afraid of it. If you like that trend, go into it. If you're doing all the math and all the charts and that's what it's telling you to do, definitely go with them. Look at them as the same. Hey, if the market's about to go up, guess what? I can make money on it going up. Hey, if the market's about to go down, hey, I can make money on it going down. We just got to make sure we're wise with it and we stick to our goal and all the rules that we have thus far. All right?
All right. Got anything to add, Kareem?
One thing I probably would add is, like you had said, I wouldn't necessarily say that, as far as the bulls and the bears, we do preferably like bear candles, because you don't have to worry about the bid. That the bid and the ask price is different. If once you enter market execution on a sale, it immediately goes into the direction that it's going. With a buy, you have to go off of the ask and the bid price. So say for instance, if it's at 58.50, 58.50, and the price is at 58.30, so that bid price is at 58.50, you won't go into profit until it hits 58.50. With a sale, you will automatically go wherever price is. So I have, like, my success rate with sales is way higher than it is with buys, because you have to wait. In some pairs, the spread on the buy is way high, so it'll take you forever to even get into profit when you're entering a buy. So just be mindful of that. And once we get to where we actually cover spreads, it'll make a whole lot more sense, because those spreads on certain pairs is the reason why certain pairs I won't even trade them like that unless it's a sale, because you got to cover the spread and the broker before you can get paid. All right.
All right, that's true, man. Appreciate that. Do we have anybody that want to add anything else? Any questions, comments, concerns? Terry, you got anything you want to add, or got any questions about anything?
Thing I would the mentality.
Hey, we can't. Hey, Terrence, you going in and out. You going in and out, Terrence. Say again. Nah, it's like going in and out. I don't know if he went out. Can y'all hear me?
Yeah, I can hear you.
Okay, yeah, I can hear you now.
You can hear me now?
Yeah.
The mentality of going into a buy compared to going into the sell, is it different, or is it the same type of mentality? It's just going on an upward down trend?
As far as what you're asking, if you know that, like what Cedric was saying, we call it market sentiment. If you check the sentiment, we really use like investing.com. It'll give you a percentage on if it's an overall buy. It'll show 5 minute, 10 minute, 15, 30 hour. If all the little squares are basically showing that it's a buy, like a bullish market, then you have a higher percentage of hitting those buys. So then you can have more confidence in getting into the buy if you know that it's going to go in there. And also with those lines that I be sending out, those are consolidation periods. So once price closes above a consolidation, it automatically goes, it furthers into that direction that it closed in. So if you see the consolidation period is in a buy area and it goes northward, then you can have the confidence that you can enter the buy. You're just going to have to wait until it hits that line. You know what I'm saying? Once it hits, then you can get your profit. With a sale, is totally different. It'll just go straight into the profit once you hit a sale. If price is where it's supposed to be at.
Okay, I got you. Yeah, I just wanted that. It was just something that was kind of ticking on me. Like, is the mentality a little different, or the way you move different compared to a buy? The bull or the bear.
And the reason why we say that, to piggyback off what Kareem said, the reason why we say that is because, like, I have seen the market sell more at certain times than it does buy. It's almost like when you're doing a buy, it's almost like picture yourself running up a hill. Like, it's hard to run up a hill, but
Right.
when you're running down the hill, you don't have to run that fast because you got to control yourself. So because the hill is going to do everything for you. So basically, if you're running, you exert yourself running up the hill versus you do coming down the hill. So
Okay.
that's why we say that, because it's when you look at more stuff, when you look at more pairs, they're more reluctant to sell longer than they are to buy. Some pairs they'll buy longer, but it just depends on, like, getting in and looking at investing.com. But what I wanted to show you, to piggyback a little bit off your question, is if you go here to investing.com. So if you go here to investing.com, so as you see, I clicked on the Dow, which is a US 30. So right now, the US 30 is up 0.39%. So if we're looking at it, it'll let us know what has it been doing for the 1, for the 5, 15, 30, the 1 hour, all the way up to 1 month. And as you see, you get people's opinion on what's going on in different parts of the chart. So what I clicked in was major indices. So you got stocks, ETFs, commodities. What we trade is the oil. So if you're going to look at gold, crude oil, Brent oil, silver, natural gas, copper, U.S. wheat. So let's see if we look at gold.
Okay.
So it let us know that gold is up right now at 1537. So if you're looking at gold is currently up. So that's just letting you know. So what is your settlement? So people bet it's just a bear market. So basically the same thing that you have on your phone is maximized by what you have on investing.com. So now this right here lets you know. So if you're looking at the pairs, you got a sale right here. It's saying Great British Pound USD is a strong sale. USD JPY is a strong sale. AUD USD is a strong sale. USD CAD is a strong buy.
Hey Cedric, change the time frame right there to an hour so they can see
Okay, my bad.
how it would change. You know what I'm saying? Because it may get.
Yes.
They'll be able to see the difference.
Yeah. So this
now
is
definitely.
Go ahead, Karen.
Oh, it hasn't changed yet.
No, I haven't.
It hasn't.
So
yeah, change it to an hour.
Okay. So this is what I'm saying, that the reason why you don't want to scalp the currencies, the reason why you want to try to scalp the currencies, because on the 5 minute, this is what it looks like. But if you go to an hour, you have a basic change. Actually, it's almost the same.
So that means that it would be a strong chance to go into a sell.
Yeah. Yeah. So on the hour, this is why when you're looking at the currencies, you want to look at them off an hour, because this basically tells you everything that you need to know when it comes to, the different currencies that you're going to be trading. So once again, if we're doing gold right now, gold is a strong buy. Silver is a strong buy. And if you don't know, gold, silver, and copper, platinum, all those run at the same area. So if gold is trending, that means silver, platinum, and copper is trending too. So if we're looking at crude oil, now, mind you, this is real time. So this updates before MetaTrader 4 updates, because MetaTrader 4 is an app, so they got to feed that app. This right here is real time. You got people, and this is all over the world. That's why we tell you Forex market is a 24-hour thing. So this is all over the world. So when we're looking at this is happening right now. So even though it's trending at this time, it's still a strong buy. So that's something that you want to look at dealing with different types of things on the market when you're talking about whatever you want to trade.
Right. Okay. I got you.
Does that answer your question, Terrence?
Yeah, that's good.
Does anyone else? I'm sorry, go ahead.
Yeah, that was good.
Okay. Does anyone else have any questions, comments, or concerns? Right. So if we don't, if not, as you see, I always have investing.com logged in. So if you don't have this saved or whatever, I recommend that you have this somehow saved on here to your personals. This way you will actually be able to trade and actually go back to investing.com on your computer, because you can see everything that's going on. That's the reason why I do it, because I like having investing.com on my computer to learn how to trade it and look at stuff from my computer, because once again, I don't know when it's going to rain or something's going to happen, and it's going to I won't be able to look at the trades like I need to. But if I'm trading off my computer and looking at investing.com on my computer, it don't matter who calls me. Right.
So I sent some info to the group chat as far as the bid price and ask price and the difference between the two, and I also sent a screenshot of what the investing.com app sentiment would look like, because it looks different than the website. It gives you a better detail. It has it all the way up to the hour and everything. And if you see all of them are in a strong buy or in a strong sell, feel confident in taking those trades as long as you haven't waited too long. You could definitely hit those key markets whenever you're trying to get in. So don't be afraid of the buys as long as you're not going against the trend. The first time I had real success, Cedric knows this as well. The first time I had real success was with US 30, and Cedric was the first person that I knew that was trading US 30. We were all scared of it because it's so volatile. I'm talking about, man, the thing is volatile. But when I messed with it a little bit on my demo until I built some confidence, and it probably took me a month before I had real success. But I never went against the trend. If I'd wait and then investing.com and Forex Factory was showing what the sentiment was for US 30. If it was an overall buy today, all I did was buys. I did no sales, and I ended up making having a $1,200 week. I made $300 every day for like 4 days straight, and I think like on the fifth day, no, Wednesday I didn't trade, so it was 4 days that I made over $300, and at the time we wasn't trading on Wednesdays. But I did that all, and I had very little knowledge of really how to trade. I just stuck with the trend. The trend was a buy, all I did was enter buys. If the trend was a sell, all I did was enter sales, and I pretty much didn't lose any trades. And so if all else fails, find the trend and go with the trend.
Hey, Kareem, while you're talking about it, since I know we just had Brad to log on over here in California, can you explain to him when you go with the trend of a trade or whatever? Can you explain that in depth a little bit?
Okay, yeah. So when the market opens, sometimes it's not as much activity, but once the traders all wake up and they start entering trades, whoever places the most trades, basically the buyers and the sellers, bulls, bears. It's always one against the other. That's what we're doing. It's a huge tug of war. So we got the bears trying to bring it down, and you got the bulls trying to bring it up. So whoever has the most money into the market is going to dictate what happens. You want to wait until you find out what these guys are doing because we're small fish. The big banks control it all, you know. And they pretty much rig it, but you want to find out what they're doing. Once you find out what they're doing, you stick with that. So if it's a buy trend, meaning it's going upward, and you see the chart, you can just look at the chart. If you see the chart in an upward trend, like the arrows are going up, the lines are going up, try not to do much selling. Always stick with the buys because you can hit those trades a lot easier. But if you do want to get into sales when it's in a buy-in a upward trend, you would only scout on, like you said, on a small time frame, minute time frame, 5 minute time frame. But that's only really effective if you're using a volatile pair like US 30. Sometimes you can do gold or oil, but you have to have larger lot sizes. But with US 30 at 0.1, I made $1,200 in 1 week at 0.1. Now I'm not going to sit here and tell you that it was easy. It was some stress because those pullbacks, it typically do like a 30 pip pullback every candle frame. So sometimes I was negative $200-300, and I would bounce back into the profit, and I would probably only hit $13. So to be honest, the risk to reward ratio wasn't worth it, but it taught me how to do it. So stick with the trend if possible. We all want to find out the trend and just ride that trend into the next trend.
I appreciate it, man. I appreciate it.
No doubt.
I know Brad just got on, so this right here, this information and training be hung on the video. I'm sorry, on the PowerPoint slide. Jeez, why I said PowerPoint slide? It's gonna be hung on the Seven Figure Earners website, so you can actually get on there and answer, ask any questions, or once you look at the video, ask any question that you may need to us, and we'll take care of it. Today was the training of bears versus bulls, so you can understand how the market pulls different ways, and we taught how you look at the trend. You want to look at the day. Sometimes you look at the week to see how it's trending overall. And as Kareem just explained it, you never go against the grain. We don't have an account to go against the grain. If we try to go against the grain and see if we can make the market change another way, it's going to end up blowing our account because you got billion-dollar industries that's in the market right now that's causing the market. And when we say the bears versus bulls, those banks are the ones doing the bears versus bulls against us. So we're going to make sure that we're going behind them so they can leave us the residue of making money. Brad, I know you just got on, man. Do you have, anything you want to share with the group or any questions or whatever?
Yes, I want to say hello to all. Hope all is well with everyone. Thanks, Ring, for that little bit of knowledge. I know I jumped down here late. I got a lot going on my side of the world. But at the same time, I'm just soaking up everything pretty much like a sponge. I'm reading a book that I got, looking at the training videos. So I'm just soaking up everything right now. But I definitely appreciate all the knowledge that's being passed over the group chat. There's definitely a lot of knowledge there. I really appreciate that. And I'm just being a sponge right now. Thanks to everybody who's adding their inputs.
All right, no problem, man. And Brad,
Hey, Cedric, I like to add something, Cedric.
Go ahead, man.
I really do encourage everybody to start working on their demo, because that's the only way you're going to learn how to trade. If you having any problems or you don't know how to set trades or what to look for, please ask us questions. I'm dying to answer questions because I spent a lot of money to get this education, and it wasn't because of a program I bought. It was because I lost the money, and that's how I learned. That's how I figured it out. I don't want you guys to do that. I don't want anybody else to have to blow through money and blown accounts to learn how to trade. It was trial and error figuring all this stuff out. So the demo is your best friend. If you blow a demo account, just create another one. You can put as much money as you want in your demo account or as little as money as you want in your account. But the key thing is we're sending signals. Even if you don't know what you're doing, let us know how. We'll tell you how step by step on how to enter the trade. Because every single trade that I sent out a signal, actually hit. So if you guys would have been using them on your demo, you would have saw the profit. And once you see the profit, that lets you know, shows you how to do things. So, you know, if you have any questions, it's 4 of us, and we've all brought different people in. Doesn't matter which one of us you hit up, let us know, and we'll help you get through it, because that's the only way that you're going to be able to learn how to trade.
Yeah, I'm gonna definitely need some help with that, man. Appreciate that, Ring. Definitely need some help with the demo account.
It's not a problem. We got you.
All right, man. I appreciate it. Thanks for bringing that up. Once again, like we love to entertain questions, no matter what question it is. I mean, it's nothing that we haven't heard of, and then nothing that we won't try to. If we don't know it, we'll try to, you know, help you find the information. So we're definitely here to help and here to encourage. All right. I think that's it. We already went around the horn again. Once again, any last closing remarks? We don't have anything else. Terrence, I don't know if you have anything. If not, we'll close it out from here. All right. So we'll go ahead and close it out with prayer, and then we will see you guys on Tuesday. Once again, we'll be sending signals to the group chat for you guys to jump into it. If you don't have your demo account set up, matter of fact, I'll tell you this right now. If you have your demo account set up, screenshot it and send it to the group chat. I don't care about like the money wise or whatever. Just screenshot it, send it to the group chat, so we know that you're active and you're out there. And you know, no matter what, we still gonna send you pairs, but just screenshot and send it to the group chat. All right. That being said, we're gonna go ahead and pray out, and then we will see you guys on Tuesday. Lord, we thank you, Lord, right now for life, health, and strength. We thank you, Lord, for all you've done. Thank you, Lord, for who you are. Thank you, Lord, for this business. Thank you, Lord, for everyone that got on, for the ones that got on late. Lord, we thank you, Lord, for a chance to learn and grow as a team. We give you the praise, God, for what you're doing in our lives. We thank you, Lord, for the ones on the East Coast, the ones on the West Coast, the ones in the Midwest, the ones overseas. We give you the praise for it right now in Jesus' name. Thank you, Lord, for productive training. Thank you, Lord, for all you've done in our life to help us to learn something to be productive for the rest of our life. We can pass on to our kids and kids' kids. We give you the praise for it right now in Jesus' name. Amen and amen.